All right, let's start with the stock market on the weekend report. I've got an idea of what I think is going on and tentatively how I'm going to play this. So I'll start with the S&P. You can see we did meet one qualification for a daily cycle low in that the S&P did drop below the cycle trend line. However, it did not stay there long enough to turn the 10-day moving average down, and the 5-day RSI never got oversold. So, in my opinion, I think this was just halted a bit prematurely so that the market was not in a downtrend for the Jackson Hole Symposium. So that's the S&P. Now let me move to the NASDAQ. All right, so on the NASDAQ, we don't have a trend line break, so there is no confirmation at all that this was a daily cycle low. And again, RSI never got oversold. And we've got a higher high today on Friday. So I think we have to count this as a stretched cycle that was just manipulated a bit to prevent it from dropping into the daily cycle low this week ahead of Jackson Hole. So I'm gonna play this as if we've got a daily cycle low ahead of us, and we are now very, very late in the daily cycle, which means that I don't really want to be long right now. The current cycle count would be day 40 if we um, under the assumption that this was not a daily cycle low and that this daily cycle has just been stretched by a little bit of intervention here. So I'm going to say we're on day 40. The NASDAQ is at 79.50, which means we got about 50 points to go before we hit 8,000. And I seriously doubt that the NASDAQ is going to get through that big round number at 8,000, other than maybe marginally. And we could certainly go to 8,020 or something like that. But I don't think the NASDAQ is going to get through 8,000 on a sustained basis right here. And especially if I assume this is a daily cycle that's on day 40. So I don't really want to go long trying to catch 50 or 60 points in the NASDAQ. And possibly run the risk that maybe this daily cycle tops a little earlier than 8,000, and then we get caught in a daily cycle decline. I think the better way to play this is to assume that we're on day 40, and when the NASDAQ reaches 8,000, we possibly take another small, maybe 10% position trade in TVIX again. I think that's probably the risk reward is a little better with that strategy rather than going long here on this breakout, assuming that we're going to have a sustained breakout. I don't feel like that's I don't think the risk reward is very good with a long strategy right now. And we've kind of got the same round number type situation with the S&P as well. We're a little over 20, I guess about 26, 25 points, and we're going to hit 2,900 on the S&P. Again, big round number. I doubt that we're going to get through that on the first try. So I'm going to assume that we've got limited upside here in the S&P before we get something that we can recognize as a daily cycle low, something that breaks a trend line, which at this point we would need to redraw our trend line. If we assume that this is just an ongoing stretched cycle, then our trend line would be here. And so we're going to look for something that breaks this trend line, turns this 10-day moving average down, and then pushes the 5-day RSI down here to an oversold condition, something along the lines of this. Something recognizable as a daily cycle low. And then assuming that occurs sometime in the next 2 weeks, then I think we could be confident in taking a leveraged position for a run up to the rate hike on, I believe it's on September 21st. But right here with the Nasdaq very close to 8,000, the S&P very close to 2,900, and nothing that really qualifies as a daily cycle low back here. I just don't like the odds of trying to go long here and maybe getting caught in a daily cycle low very late in a daily cycle. So of course this could always change if I see something that changes my mind on Monday or Tuesday, but right now I think that's how I'm going to play it. I'm going to not worry so much about the long side right here and maybe look for a TVIX trade sometime next week if the Nasdaq can reach 8,000 or if the S&P can reach 2,900. Moving on to the currencies. Now this isn't necessarily a daily cycle trend line. The daily cycle, if you wanted to be a stickler, would be here. We haven't broken that, but we've broken a much larger trend line. Again, I don't necessarily think this is, I would call this the intermediate trend line. I think the intermediate trend line you got to draw like this. So we haven't broken either one of those trend lines, but we have broken a major trend line right here. So I'm going to say we've got confirmation that we've got a daily cycle low here. And even though the intermediate trend line would be, up here somewhere, I'm going to say the odds are very high that breaking this trend line here is probably all the confirmation we need that the euro has completed an intermediate bottom. So what I think is going to play out is the euro is probably, and this will tie into the dollar cycle as well, but I'm kind of expecting the euro to rally right up into this zone right in here. Let's call it around 118 or so. This resistance zone, I'm looking for next week a rally into this level and then a dip down into a half cycle low. So let me switch over to the dollar chart. All right, so here's our last daily cycle low. This is a pretty long cycle. The dollar hasn't broken this trend line yet. It really needs to break it to confirm the daily cycle decline. So that's where I think we come in with that euro chart, since the dollar is more or less just an inverse image of the euro. If the euro rallies enough to hit that resistance zone at about 118, that should bring the dollar down far enough to break this daily cycle trend line. And considering that the dollar is about 40, I think it's 46 or 47 days into this daily cycle, then we're going to be due for a daily cycle bottom here pretty soon. So that's why I think the euro is probably not going to get through that resistance zone around 118 on the first try. And then the euro is going to pull back into a half cycle low, and that's going to give us a bounce in the dollar out of its daily cycle low. So let's say we're looking at something like this. We come down, and I'm not exactly sure where the dollar would be if the euro gets to 118, but let's call it somewhere here around 93 or so. We get down here, we break this trend line, we confirm the daily cycle low. We're going to be somewhere around day 50 or more, which means we're due for a cycle bottom. And then we should get a bounce. And this would correspond with the euro dropping down into a half cycle low. And then this daily cycle should left translate. And we get our left translated cycle down into a bottom. And my guess is it's going to bottom sometime probably right before the elections. And a likely spot for that bottom would be right in this area right in here, maybe around 90 to 91 zone, and that would be my guess as to where we're going to get our intermediate cycle low in the dollar. Okay, so moving on to gold. And now if we assume that the dollar has maybe another week or so to reach its daily cycle low, then as I've shown, I'll draw this in again. So we did break through this trend line today. So gold has it's actually got two confirmations. We've broken the cycle trend line, so that confirms that this was a daily cycle low. And we've also, let me put the 10-day moving average in here. We've also closed above this 10-day moving average, and barring a complete reversal on Monday, then this average should start to turn up, and that'll confirm this as a daily cycle low. So it doesn't seem like there's much doubt at this point that we've got a daily cycle low, and because the intermediate cycle is already one of, if not the longest intermediate cycle in history, I just don't think the odds are very good at all that this daily cycle would roll over and give us another leg down into, an even more stretched intermediate cycle low. So I'm going to assume that this is a daily and an intermediate cycle low, and probably a yearly cycle low. And then another plus is we've broken through this resistance level at 1210. The next hurdle will be to make a higher high above 1238. And I think we will either get to this level as the dollar moves down into its daily cycle low, or we might get a little above it. And so my strategy going forward, I don't think this is going to just all of a sudden become easy, simply because dollar's late in its daily cycle. Once it bottoms, we're going to get anywhere from a 5 to 10, 12-day bounce in the dollar. So gold could continue to be a kind of a complex bottoming pattern here. So I'll just give you some ideas. Let's say gold rallies for the next 5 to 10 days as the dollar completes that move into a daily cycle low. Come up here to test this resistance zone. This was the July bottom, and then the top for this little rally here. That's probably going to be a tough resistance zone to break through on the first try. Prime spot for a move down into a half cycle low. And if the dollar is bouncing out of a short-term bottom, then we could get another scary move back down, maybe even back down to test 1210, this support zone. Possibly we kind of form some kind of a vague head and shoulders bottom, maybe. And then as the dollar starts to move down and give us that final move into an intermediate cycle low, end of October, beginning of November, then I think we could get a trending move. And depending on how far this trending move goes, if we get a big move that takes us back up to the, widen this out just a touch more. If we get a big move that comes back up, and if it was able to break above the baby bull high, which is about 1377, which would be up here, then I'm going to say we're back in business. The bull market scenario is back on. On the other hand, if the rally is kind of weak and maybe we're only up here around this resistance zone right in here by the end of October, then we're probably stuck in that trading range scenario that could go on for, most of the duration of this 8-year cycle, and there's still about 5 years left in this 8-year cycle. So a lot is going to depend on how gold behaves as the dollar moves down into that intermediate cycle low that I'm looking for towards the end of October, beginning of November. Now, I'll say this: the extent to which sentiment has moved to bearish extremes is more than enough to power a move in gold up to the baby bull high and considerably past it. We've generated sentiment extremes that are comparable to the bottom in December of 2015, and that gave birth to the baby bull rally, and as we all know, the mining stocks gained about 180% off that bottom. So this move down has been extreme enough to where we've got sentiment at levels capable of driving a breakout in the metal sector. Whether or not it will happen, just remains to be seen. And, as always, there is always the possibility that the cartel comes in Monday morning and they smash gold back down, and this just all gets wiped out again. And, we're set pulling our hair out again Monday afternoon. Who knows? There's just no telling in this sector. This is why I keep stressing is it's just going to be a lot easier to stay sane if you only have 20% in this sector. But as of right now, we've got every confirmation that we can ask for that the daily cycle is complete and the intermediate cycle is complete. And what I'm expecting to play out is something along these lines here. And what we would really like to see is for these sentiment extremes that were generated last week to push a huge rally that finally breaks us out of this trading range. There we go, we'll widen the chart out a little bit. Breaks us out of this trading range that we've been in for the better part of 2.5 years. So we've got the sentiment extremes that are severe enough to power a rally like that. We just need to see how this intermediate advance unfolds. We need to get to here, and we need to do it within the first 3 weeks of this rally. We need to get to here and through this level during the first daily cycle of the new intermediate advance in gold. So that's the hurdle that we need to make in order to reconfirm that gold is still in a bull market. If we fail to do that, then I think we're just going to have to plan on sideways, stuck in a trading range type market that could go on for several more years. And we can make money in a trading range. It's just a lot more difficult. As we've seen, this has been, I think we're going to make some really good money off this this intermediate advance, but this has sure been one of the hardest contrarian trades I have ever tried to take. Just so many false moves and heartbreaks and frustration that we just lost a lot of people during this rally, and it's going to be a lot of them probably won't be able to get back on board the bull, maybe ever. And if they do, it's probably going to be somewhere up here, and that's a possibility that could be a top. So just one of the hardest contrarian trades I have ever tried to enter, but I think it is going to pay off. And even if we are stuck in a trading range for several years to come, that doesn't mean we can't make money. It's just not going to be easy money, and if that's the case, then it'd be much better to just stick with the 20% allocation so you don't end up in the funny farm 2 years from now.